kind of multiple ways. The first thing that I would recommend to everybody is not to look to predict market falls and recession. This is one of the most popular questions that we get from our prospects and clients is like, when is the next recession happening? Like literally nobody knows about it. And somebody can be right about it once, twice or thrice, but not every time. And prediction is not really a super game to play in the stock market. We always go by assessment, not prediction. Assessment of the current market situation to make investment decisions. Second, so once you understand that there might be a market crash, or you are in the middle of a market crash, or it has started crashing, so the things that you need to do upfront, even before they start, and which you need to take precautions at all time, is one, to maintain enough cash at all points of time to make new investments. So if you do not have cash or liquidity or new investment available to make new investments, so when the market corrects, if you are unable to buy those investments at a good, better price, then you will not be able to average your current investments. So we always recommend holding a healthy cash position. Number two, do not kind of panic and sell at the bottom. So general common sense says like you need to buy low and sell high, but what generally happens with most investors and traders is buying high when things are very rosy and everybody's optimistic about the market, and actually selling when times are pessimistic is what happens. So buying high and selling low is what happens. So please avoid that. Do not make panic sells. Number three, if you also maintain a watch list. Now, a watch list is something that is not invested by you yet, it's not in your portfolio, but these are companies that have a higher valuation or are quoting at a higher value or a price, sorry, not value, and you want to collect them at a better price. So when the market's correct, there's lots of opportunities that come in, and even these expensive companies actually start trading at a lower rate. So if you maintain a watch list at all points of time, you immediately know what to get into. So this has been very handy for me. And the last part is to maintain an investment checklist. So ensure that all investments that you make actually pass these checklists, and you must not compromise on that even during market falls. It should follow all your fundamental parameters in the checklist, and only then you'll invest. So these are some tips to get through the market crash. Number one, Savart focuses on long-term investing for many particular reasons. Number one, we believe a business, when we invest in stock specifically, we are investing in a business. We are becoming part owners of a business. No business kind of undergoes transition in a couple of seconds, minutes, days or hours, right? It takes months and years for businesses to thrive or to survive or to even shut down. So we need to give enough time to the promoters and the management to actually perform. So if you are in a hurry to actually make money, stock market most likely isn't the place, is what our belief is. Number two, when we conduct fundamental analysis, we look at the financials of a company, corporate governance, the management quality, moat of a business, things which matter, and why would clients pay that business for their services or goods. So that fundamental analysis is what gives us the sanity and the rationale behind why we are making an investment decision. And finally, the third point is that we fail to understand how technical analysis kind of works honestly, and why it is kind of needs to be given a superior preference over something like investing. So we love to be patient, we love to understand the business, give promoters and management the time, and be a part of the long-term investment journey. And we don't kind of get in and out, buy and sell when there is no reason to do it. So inactivity is what defines our investment philosophy. The lesser the activity, the better it is for us. In fact, in this regard, a lot of clients also ask us, you're charging subscription fee and you're taking advisory fee, but you're not telling us new stock. Now our duty as our fiduciary duty as an asset manager is to actually create outperformance for investors. It's not to give exotic recommendations or penny stock that could be the next hottest thing in the market. We need steady wealth creation and not exotic kind of advice. So we stick to very, very basic fundamental stuff. We have also built our algorithms in the same way. Our entire technology is tuned to make long-term investments, and we believe that's going to be the future and kind of help a lot of people achieve their financial goals, and doing what is right for people is what we'll continue to do. So there are many ways to kind of get started with investing. I'll discuss my favorite way and how I did it. So one is, I love reading books, so I would always recommend starting with reading a lot about whatever you're doing. So Intelligent Investor, Security Analysis were kind of some of the books that have been really helpful to me. And second is not just reading but also implementing and putting them into practice. So to start investing, it doesn't require too much of resources. It needs you to open a demat or a trading account and put in a small amount of capital, whatever you want to start with, not taking too much risk. But the main motive of this first investment must be to learn, not to kind of start generating wealth immediately. So the self-research through reading about investing and also about investment opportunities and then implementing it is one of my methods, that recommended methods. The second, if you do not have the time, energy, interest or the experience to actually start researching and investing by yourself, I've met a lot of people who say, hey, can you just help us out with this? This is not what we want to do. So that's where Savart kind of comes in, or any other advisor in the market as well. So there are tech-driven advisors like us, there are manual advisors also that kind of look at your end-to-end services, right from helping you understand your financial goals until investing. So you could go to an expert. So these are the two options that I recommend for any beginner. So Savart caters to stock, mutual funds, bonds and gold investments in India, US and Canada. We are expanding our asset classes continuously and also the geographies that we invest in. We are often asked about including cryptos and short-term or intraday kind of trades also in our coverage. But we do not feel we have a specialization there, and also we only invest or kind of enter a particular asset class when we understand it thoroughly, which we don't with these, and they also don't align with our long-term investment philosophy. We invest with a general horizon of a minimum of 3 years, an optimal time period being around 7 years. So most of the other asset classes don't gel well into this. Whichever do fit in, we'll keep adding over there. So of course, like, we want to democratize wealth creation. What do I mean by that? Currently, a lot of people talk about economic and income inequality, the rich getting richer and the poor getting poorer, right? So to bridge this inequality, in fact, it's not just the government's duty to do that, it's an individual's duty. So we need to understand the behavior of money with each of these segment of people. Why is it that somebody is making a great ROI and somebody else is living paycheck to paycheck? One, it's a discipline and how they behave with money. Second is what investments and what steps they are taking to secure their financial freedom in the future. An investment always does not mean a financial investment. It could be investment into one's own self, whether in terms of career, whether it's in terms of skill and specialization, or capital or finance-based investments that we kind of cater to. So if we want to kind of have an extraordinary growth over the markets and kind of create wealth for the long term and get out of this cycle of living from salary to salary, there are very limited ways to do that. One is to set up an own business or entrepreneurship that we call. Second is to partner with smart entrepreneurs and businessmen and be a part of their entire success. Of course, there are all other routes, but these two are something that we focus on in general. And so the second part, which is partnering with others, so and sharing their success in the capitalistic setup, right? That is what markets are all about. So we want to open up these markets to more and more people. It's not something that it's a new concept, nobody knows stock market. It's just that there's a lack of trust. There are misconceptions. There are a lot of myths surrounding the stock market. There is massive amount of mis-selling. There is a lot of cheating. There is a lot of unethical practices that get into this industry. So we want to stand as a beacon of trust, and we want to help inspire people to make their first investment. Whether with Savart or with somebody else, they need to make an educated and informed investment. So a blind, non-research or unresearched investment is as good as actually not investing at all. So the research needs to precede any investment decision that an individual makes. Now that they could make by themselves or to an advisor or to another expert, those are different options. But then democratizing market for everybody, educating them on how to do it and why they should invest into the stock market, and helping them make smart investments in the end. That's how we are creating wealth for clients. And I believe we have done a good, not extraordinary job, because we are still yet to do that. We are on the way to do it. in kind of creating wealth for people across different economic strata. We have clients investing 500 or 1,000 rupees with us. We have clients investing $1 million or $2 million with us in over 30 countries, 24 Indian states. So we want to keep growing this diversity over time and create that wealth for everybody. So that's a very apt question. While the potential for the Indian markets is huge, the current market size remains very, very limited. And in fact, a lot of wealth tech companies and investment companies often missell this number massively, that there is a $1 trillion opportunity or billions of dollars of opportunity. Of course, that kind of potential exists. But is it prevalent right now? Not really sure. In fact, recently on Twitter, the founder of Zerodha had posted a tweet thread where he broke down the actual size of the market, which comes down to around 50 lakh to 1 crore of the Indian population that can actually be catered by these kind of services. And that's also the reason Savart does not focus much on only getting the current investors to invest, but also educating first-time investors to invest. So one interesting statistic about Savart is that almost more than 80% of Savart's investors are investing for the first time in their life. So it's a great privilege and also a thing that we want to focus on in the future, that clients and investors choose us to make their first investment. So it means we are not just grabbing market share or focused on market share, we are in fact expanding the market itself. So that's going to be Savart's focus over the next decade also.